Welcome to another deep dive. Today we're going deep on not-for-profit financial reporting.
Oh, exciting.
It is exciting. We'll be taking a look at the Accounting Handbook Part 3, which is produced by the Chartered Professional Accountants of Canada.
All right.
It's their guide to Canadian accounting standards for NFPs, or not-for-profits.
NFPs.
So, if you're involved with a nonprofit, or if you're maybe getting ready for like a board meeting, or if you're just curious about this kind of thing,
Yeah.
we're going to sort this out, figure out all the ins and outs, the whys, and,
The what's and the where's.
the what's and the where's of not-for-profit financial reporting.
Yeah, I think it's interesting because, it's a very specific type of financial reporting that has to speak to a lot of different stakeholders.
Yeah, for sure. So to start off, not-for-profits aren't like typical businesses.
Right.
They're not just about the bottom line.
Yeah.
They have a completely different mission.
Yeah.
They're serving communities and achieving goals.
Right. It's more than just profits.
It's-
It's the impact they have on the community.
So how does that then impact the way they have to report their finances?
Well, you have to think about who is the audience for these financial statements.
Yeah.
It's members, it's contributors, creditors.
All those people who are giving money.
Right, and they need this information to make decisions about, if they want to keep contributing or supporting.
Yeah, so unlike a business, I guess, where you have investors, these people don't really have that much insight
Right.
into the day-to-day.
Exactly. So they rely heavily on these reports to understand what's happening.
Yeah, so these reports become like really important for building trust
Oh, yeah.
and demonstrating accountability.
Absolutely. A huge part of it.
So like when we're thinking about the accountants
Yeah.
who are putting these statements together,
Yeah,
I feel like they have to walk kind of a tightrope
for sure.
because they have to give enough detail to be meaningful,
Right.
but not so much that it becomes overwhelming or expensive even to produce. Like, how do they figure that out?
Well, that's where materiality comes in,
Materiality.
which always sounds so vague,
It does sound vague.
doesn't it? But really, it's about figuring out what information is truly important for the reader to understand.
Okay, so how does that actually work in practice?
So let's say a nonprofit gets a huge multi-year grant
Okay.
to start a new program.
Okay.
That's a big financial event, and it needs to be reflected in the reporting, right? So materiality helps determine how that grant is reported,
Okay.
how it's tracked over time, and how it affects their financial stability as a whole.
Okay, so it's like,
It's focusing on the stuff that really matters.
yeah, so it's not just like listing every single transaction.
Exactly.
It's highlighting the stuff that drives the financial story of the organization.
Exactly. It's about giving a clear picture to the people who need it.
And I guess that also ties back to the whole different audiences thing.
Oh, for sure. Yeah.
Because like a major donor, they're going to need a lot more detailed information
Right.
than someone who like volunteers a few hours a month.
Exactly. You don't want to overload someone
Yeah.
who's just giving a little bit of their time.
Right. So how do not-for-profits actually find that balance?
Well, the handbook talks about these 4 qualities that are key for financial reporting:
Okay.
understandability, relevance, reliability, and comparability.
So understandability first, even though we're dealing with a pretty knowledgeable audience.
Yeah.
The goal is to make it clear, concise, avoid jargon,
You got it. Keep it simple.
okay, and relevance. How do you make all these numbers meaningful? Because not everyone's a financial expert, right?
Well, it's about connecting the information to what the user needs.
Right.
So, for example, if you're wondering if the organization is actually achieving its goals,
Yeah.
the financials can give you insights into performance and how they allocate resources.
Okay.
Or if you're thinking of donating, you can use the reports to check out their financial health.
Okay, so it's not just looking back, it's also
It's looking forward to.
planning for the future. Yeah.
Totally.
And reliability, that's a big one.
Huge. Yeah.
We need to know these reports are accurate,
Absolutely. It has to be accurate, verifiable, and unbiased.
especially when you're dealing with estimates and uncertainties.
Oh, yeah. Like, how do you put a value on volunteer time?
Yeah, it's a big contribution, but
It is, but it's hard to
where
quantify.
do you put a number on that?
Exactly. So these are the kinds of challenges accountants face to make sure the information is reliable.
Okay, so we've talked about how NFPs have a unique audience,
Uh-huh.
and they have to think about how they present their financials.
Right.
But what are some of the fundamental differences between their financial statements and, your typical business?
Well, one of the big ones is this idea of net assets.
Okay.
In a for-profit, equity is the owner's stake.
Right.
But NFPs, they don't have owners.
Yeah.
So their net assets are the resources they have to do their work.
So it's basically the difference between their assets and their liabilities.
Hmm.
Okay, and then there's this thing about restricted and unrestricted net assets, right?
Yeah, that's a key point.
Yeah.
Restricted assets have strings attached, usually from donors who say, use this for this specific thing.
Like if someone gives money for a building, they can't just use that to...
Right, exactly.
Yeah.
You can only use it for what the donor specified.
So it limits their flexibility.
It does.
So unrestricted assets, that's more like your general operating funds.
Exactly, more flexibility there.
So understanding these different types of net assets helps us see like how much wiggle room an organization has.
Absolutely. It shows how they manage their money and prioritize spending.
Okay, this is all making more sense.
Good.
We've laid out the foundation
Yeah.
for understanding why this type of financial reporting is unique.
It's its own world.
It is, and how it differs from the for-profit world.
Right.
But I want to dig into some of the more
Yeah.
specific details.
So let's get into the nitty-gritty.
Yeah, let's get into some of the nitty-gritty details of this handbook in the next part of our conversation.
Sounds good.
Okay, so we've covered some of the basics of NFP reporting. Now, I want to get into some of the more interesting parts of this handbook. One that really jumped out at me was this whole collections thing.
Oh, yeah. Collection.
It sounds like we should be talking about, stamps or
Yeah.
antique teacups or something.
Right.
But it's not quite that, is it?
Not exactly. So in this context, collections means things like artwork, historical artifacts, rare books, basically assets that a not-for-profit might hold for public display or education or research.
So like, the dinosaur skeleton in a museum or
Exactly.
the rare manuscripts in a library.
Yeah, those kinds of things.
That's so valuable stuff you can't really replace easily.
Right.
But how do you even put a dollar value on something like that?
Yeah, that's the tricky part.
It is tricky.
The handbook actually gives some leeway here. Organizations can choose to report those collections at their cost, which would include, the purchase price or the fair market value at the time if they were donated. But get this, they can also choose to report them at a nominal value.
A nominal value.
Yeah, often just $1 symbolically.
Wait, so a museum could have a collection worth millions, but their financials might just show it as like $1.
That's right.
That seems kind of counterintuitive.
I know, it does, right? But the thing is, a lot of these things are irreplaceable. They have this massive cultural and historical value, but you can't really put a price tag on them.
You can't just, go to the store to buy a new Mona Lisa.
Exactly. So reporting them at a nominal value kind of acknowledges their significance, but it also recognizes that their true worth is beyond just a simple number.
Okay, so it's more about acknowledging they exist.
Yeah, and that they're important.
Than trying to come up with an actual number.
Exactly.
That makes sense. It really highlights how different this is from for-profit accounting.
For sure.
What other unique aspects did you find in the handbook?
Well, another area that's interesting is the guidance on employee future benefits.
Like pensions?
Yes, pensions, other post-employment benefits, that kind of thing.
Those could be tricky even in the for-profit world.
Oh, absolutely.
So what makes it different for NFPs?
Well, one key difference is how they report changes in those benefits. In a for-profit, you usually see those changes flowing through the income statement, affecting the bottom line. But for not-for-profits, the handbook says those changes have to be presented in the statement of changes in net assets.
So instead of treating them as part of regular income or expenses,
right,
they're shown directly in the organization's net asset position.
Exactly.
Why is that distinction important?
Well, it's all about transparency. If there's a big gain or loss in the pension plan, for example, stakeholders need to see how that affects the overall picture.
So it's like saying, hey, these changes matter, and here's how they affect our bottom line.
Exactly.
Transparency is definitely key. Okay, what about things like mergers and acquisitions? I mean, we know they happen all the time in the for-profit world, but I'm guessing things are a little different for not-for-profits.
You are right. Mergers and acquisitions with NFPs, they definitely have their own unique wrinkles. And this handbook gives specific criteria for telling the difference between a merger, where two organizations come together to form a new entity, and an acquisition, where one takes over another.
So how do you tell if it's a merger or an acquisition? Is it just about the size of the organizations? Like, is it always a bigger one swallowing up a smaller one?
Not necessarily, no. The handbook actually looks at things like the relative power of each organization, whether there's a clear transfer of control, and how the combination impacts the overall mission and the community.
So it's more about understanding the dynamics of the relationship and the mission.
Exactly.
Than just looking at, who's bigger.
Exactly.
And that distinction then has a big impact on how the combination is reported.
Oh, absolutely. It affects how assets are combined,
Yeah.
how liabilities are treated, and the overall financial picture presented to stakeholders.
So again, we're seeing this theme of transparency and making sure stakeholders have a clear picture
Exactly.
of what's going on.
Yep.
Now, what happens if a not-for-profit is facing financial uncertainty? We haven't really talked about that yet.
That's a great question, and it brings us to this idea of going concern.
We were just talking about going concern. And, in the for-profit world, it's a big deal. It basically means the company is expected to stay in business. But what about for not-for-profits? What's the significance there?
Well, it's crucial for them, too. If there are serious doubts about an organization's ability to keep operating, it really affects how their financial information is presented. It's a red flag for anyone looking at the reports.
So if a nonprofit is having money troubles, like maybe they've lost a big funding source or donations are down, does that have to be clearly communicated?
Oh, absolutely. Transparency is key here. Stakeholders, donors, volunteers, grant makers, everyone needs to know if there are risks to the organization's long-term sustainability. It's about making sure people can make informed decisions.
So it's another layer of accountability.
Definitely.
It makes them be upfront about challenges.
Yeah, and make tough decisions if they need to.
Right. It underscores that these reports aren't just about the numbers. It's about making sure these organizations can actually do their work and serve their communities.
Exactly.
Now, I'm trying to imagine someone brand new to a nonprofit board, right?
Yeah.
They get this giant financial report. What advice would you give them to make sense of it all?
Don't panic. I think that's the first thing. Don't be intimidated by all the information. You don't need to become an accountant overnight. Start by focusing on those key financial statements, like the statement of financial position, the statement of activities, the statement of cash flows. Those give you the big picture overview.
So it's like checking the vital signs to get a sense of overall health.
Exactly. Look for those indicators, those key things that tell you how they're doing financially.
And don't be afraid to ask questions, right?
Never. Reach out to the finance staff, the auditor. That's their job to help you understand this stuff.
This brings us back to accountability, right? These reports are more than just numbers. They're about transparency and responsible stewardship of resources.
Absolutely. When we engage with these reports, we're part of that process of accountability, making sure these organizations can serve their communities.
This has been eye-opening, really. I've learned so much about this world, but it doesn't stop here, right?
Nope, the learning never stops. Keep exploring, keep asking questions, keep pushing for more transparency and accountability in the nonprofit sector.
Great advice. Thank you for joining us on this deep dive into not-for-profit financial reporting. Hopefully you've all learned something new today. Until next time, keep seeking knowledge, keep diving deep, and remember, even though it's called nonprofit, there's a lot of good that comes from making a positive impact on the world.